Tēnā koutou katoa. I'm Sue McCabe from Philanthropic New Zealand, coming to you from our offices in Wellington, my first time in the office since before lockdown, so it's been an exciting day. Thank you very much for joining us today for this post-budget webinar. We're very, very grateful to have Bevan Graham joining us from AMP Capital and giving us his insights and his time, so thank you very much, Bevan, for that. Bevan, prior to joining AMP Capital as its Managing Director and Chief Economist, has held a number of senior positions, including with AXA Global Investors, the Chief Economist at Westpac, Chief Economic Advisor to the Leader of the Opposition, which covered, I understand, 2 leaders of the opposition, and Chief Executive at the Economic Development Association of New Zealand. Bevan's key research interests include economic growth, economic development, and monetary policy. Many of you will know that AMP Capital are a platinum sponsor of Philanthropic New Zealand, and their very generous offer to lend us Bevan today is just an example of how much we appreciate this relationship with them, and it extends way beyond the financial support we receive. So before we get into it today, some quick housekeeping, and this is a reminder that we cannot see or hear you, so if you want to sit there knitting or doodling or doing some stretches, you're more than welcome to. We have heard about people who sit there very quietly and still because they think we can see them. Please use the Q&A function because there will be time at the end of this webinar for us to answer your questions, or more specifically for Bevan to answer your questions. And the other thing is, we aren't going to survey attendees after this webinar, but we'd love to hear from you as to how you found it. So just email your favourite member of the Philanthropic New Zealand team, and also, as always, let us know about what other topics you'd like us to provide for you, our members. So without further ado, because we know you're all here to listen to Bevan, we will kick it off. And Bevan, I will put the first question to you, which is, tell us how you felt going into this quite unusual budget, given the unfolding impacts of COVID-19.
Hi, Sue. Good afternoon to everyone. Look, just following on from Sue's opening comments there, look, I'm delighted to be here this afternoon, and you know, we are long-term supporters of Philanthropy New Zealand. We fundamentally believe in the work of Philanthropy New Zealand and all of its members, you know, you do important work, and I think that you know, that work is going to become even more important as we recover from COVID-19. But look, Sue, back to your first question. Look, you know, I guess, you know, the economy was actually in reasonably good shape as we before the virus. You know, growth was certainly slowing. You know, a lot of that was just due to the fact that we had full employment, which is actually a good reason for growth to slow, a positive reason. You know, unemployment was very low, and while it was slowing, there was certainly no imminent signs that we were heading into recession. But then, of course, everything changes very quickly. The virus hits, spending collapses, and it's not just collapsing here in New Zealand, it's collapsing right round the world. You know, we got that early taste of what was to come in China, but then it very quickly expanded elsewhere. So what we ended up seeing was that classic black swan demand shock, and all of a sudden spending collapses, and you would have seen some of the retail sales numbers coming through. GDP is collapsing around the world also. Unemployment is spiking higher. Quite a bizarre weekend last weekend. I'm sure like all of you guys, first thing you do when you wake up on a Saturday morning is you click on to your favorite finance app to find out what happened in the United States, you know, on Friday night. And I did the same thing, expecting to see a very weak US equity market, but it was actually very strong. Because although the US lost 21.5 million jobs in April, the market was expecting the economy to lose 22 million jobs, and therefore it was a positive outcome. I don't quite see, but just shows you that markets are not always sensible or rational, at least in those very early moves. But look, as I say, you know, the numbers are just truly awful. The IMF is expecting that global GDP will contract 3% this year. If you go back to the global financial crisis, the worst year for global GDP was a minus 0.1. So this is, if you want to, multiply it, it's 30 times worse than what we saw back then. And look, here at home, obviously we're being hit as well, and the unemployment rate here will rise. We think to probably over 10% over the next 6 months. And of course, there will be a number of sectors that are being hit worse than others. And unfortunately, and this is where the philanthropic sector comes in, is that a lot of the people that have lost their jobs are actually our most vulnerable. And they are the people on low wage, may not have secure housing, and I think the recovery for those people on low or with no skills is going to take quite some time.
Thank you, Bevan. Given that environment that you've outlined and those really dire predictions, what were you expecting to see in the budget and what surprised you?
Look, I think what we were expecting to see was the government to throw pretty much everything at it, and it certainly has. I would say, though, that after watching 30 budgets, nothing really surprises me hugely. I can't wait to read Bill Birch's book, because those were some of the first budgets that I covered. But look, we were expecting obviously a mix of continuing support for the economy as we go through this very, very weak phase in growth and very dramatic increase in unemployment, but also then starting to gear up for the recovery, because the reality is that the government cannot keep supporting vulnerable firms forever. At some point, that support needs to end, and there will be firms that will fail through this. We're already seeing those stories on the news at night and in our local community. So businesses are failing. So the next step is then for the government to step up what levers they can pull in terms of supporting the recovery. I guess the other thing that surprised me was, I guess, the overall quantum of the expenditure. The government had already spent $26 billion prior to the budget. They committed another 16 billion in the budget, and there is a little war chest, not so little actually, $20 billion left available for future initiatives. But I guess, Sue, the flip side of being surprised by the quantum of expenditure is that you're then also surprised by the quantum to which debt is going to be rising and the size of the government's bond program.
Great, and you've answered some of this, but what do you like most about the budget that was announced, and what aspects of it give you concern?
Look, I like the focus on skills and jobs. And look, regardless of whether we had seen COVID-19 at all, I think the best thing that government can do for developing a highly productive economy is to support the development of skills. So 1.6 billion spent on skills, trades, and apprenticeships was certainly welcome. I like also the fact that the government's linking, as you'd expect them to do, some of the initiatives with some of their longer-term jobs. So a commitment to jobs in the environment is a very, very positive development also, and closing the housing gap. Look, we know that net migration is going to slow to zero very soon, and when you think that that's been roughly 3/4 of the growth we've seen in the New Zealand economy over the last decade, it has put huge pressure on the housing market, and that pressure is going to come off to some extent, but we do have an existing deficit of housing, and so there is a real opportunity here to really put the foot on the pedal and try and close that gap while this opportunity exists, if I can put it that way. And it goes, yeah, as you say, the concern really was the rise in debt. And I just make the point, so that the government's only been able to respond this dramatically because the government's accounts were in good shape, and those accounts being in good shape came from 10 years of pretty hard work, getting the books back in shape after the global financial crisis and the Canterbury earthquakes. So the job for the next government, whoever it is after September, is going to be another 10 years of getting the books back in order, so that when we get the next crisis, we can respond just as emphatically.
You did mention that there's 20 billion of funding that's yet to be committed, and also quite understandably, there were a lot of packages announced that had very scant detail in terms of how they'd be implemented. What do you think of this kind of partial approach to the budget, and what's your thoughts on where the money will likely go or should go, and who will be lobbying the government hard right now to get a slice of the pie?
Great question. Look, I'm actually okay with the approach the government took to the budget. So there were two approaches that they could have taken, and delivered a budget with some detail missing, which is the course that they obviously took. Or you could take the approach that the Australian government has taken, and that is to defer their budget till later in the year. From memory, I think it's October. Don't quote me on that, but they pushed it out about 6 months. Look, I think that it's good for transparency. I think it's good for the fact they've delivered a budget. It's good for transparency, good for indicating the scale of the commitment that they are making to this, and good to wait before committing all of the funds. So I'm quite happy, given the time frame, that all of this has occurred over. So it's only a matter of weeks, really, and I'd rather them take a bit of time to consider that next $20 billion rather than rush into deciding what they were going to spend it on. Because look, there is, economists are not always right, and I know that's hard to believe, but it could be that as we get down the track, the recovery may be faster and more successful than we think, and all of that 20 billion may not be needed. But in terms of what they should spend it on, this is where they now have to go back to what their pre-COVID strategy was anyway, about commitment to reducing inequality and support for the environment and climate change, and link the next phase of that expenditure to what their long-term goals already were. So that's what we'll be looking for out of that. And in terms of lobbying, I imagine as soon as Grant Robertson enters the door of Bellamy's, which is the parliamentary restaurant, he will be swamped with his colleagues, all offering to buy him dinner and go through their great ideas about where some of that 20 billion should go. So look, in terms of who's going to be lobbying, I would say everybody.
And that's a nice segue to our next point, because probably the sector that won't be there at the door of Bellamy's lobbying hard will be the community sector. And we've got a mix of philanthropic funders, grant makers and community groups on this webinar. So, we'd be really interested in your comment on aspects of the government's budget that are specific to funding of not-for-profits or the activity of the community sector.
Yeah, sure. Look, as I said right at the start, I think your role in all of this is going to be just as critical as the role that the government plays. So, and I think there is opportunity, to lobby for some of the things that you want to do also. And I think, there is nothing like a crisis to create opportunity for some of these sorts of things to be developed. And I think it just, I would just encourage you to continue to link your initiatives with the longer term goals of the government. And look, I think you already are. If housing, reducing inequality, the environment, all of those sorts of things are front and centre to what the government is is looking to do. And look, there was a bit in there for the philanthropic sector, but I think it's stuff that was probably going to be in there anyway, and so ended up paling into insignificance with some of the scale of some of the other initiatives. You know, there was some initiatives in there for disability support, family and violence services, community food providers. You know, I think what is going to happen is I think that the government will be surprised by the extent to which demand for community food providers is going to last for longer, where I think will last for longer than they expect, where our economic forecasts differ from those of the Treasury's, is the Treasury actually thinks that this initial hit to GDP will be greater than we think, but they've got it all coming back very quickly. It's almost like this is just going to be a 6-9 month period of very weakened activity, and then we go fundamentally or pretty close to back where we were. We just think it's going to be harder work, just because we think that there will be a lot of firm destruction that will come out of this. And that means that the unemployment rates will remain higher for longer as new firms inevitably get established. But Sue, look, I think big role for Philanthropy New Zealand to take in this too, in terms of that interface with the government, and just highlighting, you know, as I'm sure you already do, the good works that the sector does.
Thanks, Bevan. And a lot of our funders are seeing on the ground you know, the impact of COVID on, you know, service demand for charities, changes they need to make, and also cuts sometimes in their funding. And Philanthropy New Zealand is partnering with Hui and also Volunteering New Zealand and the Centre for Social Impact within Foundation North to release next week a survey of the community sector to try and get a real snapshot of what's happening, to help the sector have the data that's needed to be heard in terms of some of that government decision making. And that's a really good tip in terms of always linking our work to the government objectives. So there's going to be a lot of red ink for a fair number of years, as you've already outlined. Can you explain in a bit more detail the financial impact of the budget on our country's books? You know, and you've talked a little bit about predictions, what the government is predicting versus where we end up. And so where do you think we'll be, say, in 1 year, 5 year, and 10 years' time?
Wow, that's real crystal ball stuff, isn't it? Yeah, look, as I say, there is going to be some red ink for quite some time. You know, it did take us 10 years to get back down from 30% of debt after the GFC and the Canterbury earthquakes to get down to 20. So it's going to be even harder work, you know, to get from 50 back down to 20. So and that will take a long time. So after we're through this period of recovery, rebuilding, the government then needs to pull back and look at its spending programs and maybe even look at its taxation policies as well. And you know, I think that there is. We know that the government's already ruled out a capital gains tax. That might actually end up being back on the agenda as part of the equation in terms of how we get the books back in order. I've always had an issue with New Zealand superannuation. I think it starts way too early at 65. You know, so I think, you know, we're going to see a whole lot of policies that are going to be up for grabs again that might have been previously discounted. So it's going to take a long time. And in terms of the economy, look, our fundamentals are still pretty good. What I do worry about is the fact that a lot of the growth that we've seen in our economy over the last decade has been driven by net migration. So just through population growth, and you back the population growth out, and our per capita GDP growth, or as what we economists call productivity, has actually been quite low. So if we're going into an environment now where flow across borders in terms of tourism and net migration are going to be reduced for quite some time, then that impetus from growth is not going to be there. And so I think the growth environment will inevitably be weaker, but because it's not driven by population growth, it could actually be better quality growth, if that makes sense. And I think, you know, that there will be quite significant productivity gains that will actually come out of COVID-19. Look at how we're doing this webinar today. I hadn't used Zoom until about 6 weeks ago, because I'm a bit of a technophobe and I don't like using new technology. I'd rather talk to people, you know, face to face, or, you know, in the same room and all of those sorts of things. Well, you know, there's a new way of doing things now. I, like Sue, went into the office yesterday because I knew that I had a lot of meetings, and then it turned out that all of my meetings were on Zoom because all the people that I was meeting with were actually still at home. So that was poor organisation on my part, but also just emphasises, I guess, you know, that the way we do business is going to fundamentally change from this. I've got a staff of 35 people in Wellington, and under level 2, we gave people the option to come into the office or not. I've got 25 people still working from home and only 10 people working in the office. So that's got huge implications for, you know, how we work, commercial property, all of those sorts of things. So look, I think they're a bit of a long answer there, Sue, but look, I think there's going to be, we're fundamentally in a good space. You know, I think the fundamentals are generally pretty good, but it's going to be harder work than it has been before, because we won't have that impetus from population growth. But I think that's not necessarily a bad thing, because it puts pressure on our resources, on our housing market, as you know, net migration stays quite high.
That's great, and it's great to start talking about the opportunities as well. Before we answer another question, I'd just like to acknowledge a comment that was made in the chat around, which reflects how difficult it is for us to talk about the community and voluntary sector, the not-for-profit sector, as being one thing. And the comment was, you know, there are parts of the sector that are not-for-profits delivering core public services, you know, for example, domestic violence, et cetera, that, no, there has been successive governments that have underfunded it, so contracted it to undertake services for government, and then not paid the full amount. And there was some research on that last year, versus, you know, the other parts of this amazingly big and diverse sector that are voluntary or are not delivering core services and get their funding from non-governmental areas, including the ones that mostly get it from philanthropic funders. So that's just a really good point in terms of, you know, thinking about, you know, the impact on the not-for-profit sector. I guess in this particular webinar, we are more looking at the government funding side. And it was also interesting to note that the government have funded community groups, you know, Māori, Pacific, refugee, new migrant, and also some peak bodies in the not-for-profit sector to deliver services. So that's kind of some funding outside of that kind of core area as well. But yeah, it's a difficult thing to try and talk about the sector as a whole. I would also urge people to, now's a really good time to start putting in any questions that you'd like to ask Bevan. So staying on that opportunity theme, Bevan, what are the 3 big opportunities you think the government needs to take to kind of transform our economy and therefore our well-being? There has been, you know, commentary that the budget, I mean, it's a management tool, right? It's not a visionary exercise, but that people were hoping it would be more transformative. That might be more what we get when we come to the election in terms of that vision, where the parties have got a bit more time to think about it. But what would you punt up as the 3 big opportunities?
Oh, look, I think the three big opportunities, or the 3 areas of focus for government really need to be. Some of your members might have come to our Investment Outlook Roadshow in February, and at that time we highlighted the plan in that webinar, in that session, was to talk about what we think some of the big challenges are going to be over the next decade. And look, the one that was most or we see as being the top challenge for government, and therefore where we think, you know, a lot of the resource that might still come to aid the recovery from COVID-19 is around climate change. That is the fundamental biggest challenge facing the world and populations, everywhere. So I think there's a big opportunity for government to grab a chunk of that extra funding and really do something quite transformative in that space. Look, I think the other one, Sue, is reducing inequality, and there's a range of ways in which that can happen. But I take the more skill development route on that. I think there is a real opportunity now for government to really try and transform our workforce into a higher skilled workforce, and especially for some of those more vulnerable populations that are still overrepresented in people who are unskilled and low skilled. And I think Māori, I think Pacifica, I think the migrant communities, those are the communities that are going to find the recovery out of this the most challenging. So, in terms of those firms that get distracted, that don't end up coming through this, the workers that will be leaving those businesses will typically be low and unskilled, and we can help shorten the that time that they are unemployed by investing hugely in skills. And look, I think the other one is the digital economy and closing the digital divide. My partner is a secondary school principal over in Lower Hutt, and they were challenged to get computers out to all of their kids, and luckily they didn't have very many. But it was quite fascinating to find that there were 80,000 homes without access to a computer for online learning. And in 2020, in New Zealand, one of the most developed economies on the planet, that's a pretty shocking sort of statistic, really. And it's a shame that it took something like COVID-19 for that to be found out and responded to. So I think, so those are the three things. Those are the three areas I think the government should really be focusing on: technology, reducing inequality, and really fundamentally making some changes around climate change.
Thanks, and I think those are three areas that philanthropy and the community sector have got a huge interest and already an investment into. And I think that digital divide one shows where there's existing equity problems in terms of access to technology. When you have a crisis, it just exacerbates it, and further increases inequality in terms of who can access help and who can't access help. And we saw that not just with the school kids, but in terms of right throughout society, with the increasing need during lockdown to use technology. Another comment that we've got is a philanthropic organisation with a medium-sized investment portfolio, which is how they fund grants. They're a perpetual fund, and investment income's taken a hit, and that dilemma of how to protect the portfolio by reducing grants, but the need is even greater now. Now that's a comment, it's not a question, but Bevan, I don't know whether you want to say anything that you're seeing from the AMP Capital perspective.
Oh, look, certainly, investments don't all travel in a straight line, and there are certainly have been significant hits to some investment portfolios, especially those that have been invested in equities to varying extent. But look, from an investment perspective, this is just what markets do, and from time to time we have hits like this, and then at various times there will be, it's dependent on what the time frame to recovery is and to get back to where we were. And look, unfortunately, it will take time. And look, I know that there are a number of organisations that grant that also have reserving policies. And look, I certainly support that sort of approach. We've had a few good years in markets, and that have probably exceeded expectations. The last 3 or 4 years, we've been trying to, talk down returns because we've had such good previous market environment beforehand, and our expectations keep getting exceeded. I think it's important for granting organisations to have, reserving policies so that in good years, something aside, because it all comes at once, doesn't it? The economic crisis hits, the need rises, and also at the same time, because of the economic hit, portfolios are hit at the same time. So totally appreciate the challenge in that.
We've taken a question, are we going to see a V, a U, or a W-shaped recovery? Or are we looking at a sideways movement in the short term? Now, you might need to explain some of that terminology.
Yeah. So look, that's really just talking about what the speed of the recovery will be. And so if it's a V-shaped, obviously it's going to be sharp down but then sharp up. So you get a V, or is it more U-shaped? So we stay lower for longer and it takes longer to recover, and then gradually starts to pick back up again. I think it's actually a combination of the two. So I think if you think about a V, I think we've had a sharp fall down. I think we get a sharp recovery back up again, but probably only back to about halfway. And then that second half just takes a bit longer. So is that almost a square root sign? I'm not sure, but it's yeah. So sharp fall. The recovery's sharp, but it doesn't get us all the way back. And that second phase of the recovery will just take longer, and that will be more elongated.
We definitely don't want an L.
No, well that's
flat line.
Yeah, that's the worst one. Yeah. Oh, and can I just add into that? W is still a possibility, because one of the big concerns is whether there is another wave of viruses, and if that's the case, then you are into a W scenario. Sharp down, recovery, more virus takes hold, sharp down again, and then back up again. So that's I wouldn't rule that out either.
Great. I'm not sure how familiar you are, Bevan, with the government's response in terms of funds to the sporting sector. We have a question from a panel, from a participant in terms of, is that potentially a model? Might we see a community sector response along the lines of the Sport New Zealand funds to the sporting sector?
Sorry, can't really comment on that one. I haven't brushed up on my sporting funding recently. Yeah, sorry, can't comment on that one.
That's fine, and I think that's something that we can talk about in terms of the Philanthropic New Zealand membership, in terms of some of the models we're seeing and how they might apply within that maybe that 20 billion of additional funding.
I think that is a good point, Sue. I think I think out of this there will come greater opportunities for partnerships and organisations working together on specific things. So yeah, look for those. Definitely look for those sorts of new rules that might come out of this as well.
Another question here, that last year's budget was all about wellbeing, but we haven't heard much about either that or the living standards framework this year. Do you think this has been forgotten about?
No, look, I don't think it has been forgotten about at all. I think that comes back to that short-term versus long-term conversation we've been having about what the what those longer-term frameworks are that the government is actually thinking about. And look, I think the government is still fundamentally committed to their wellbeing living standards framework. I totally support it. I'm an economist. I still think GDP is very important, but it's only a small part of the story in terms of how we measure well-being. So look, I think what's happened is that COVID-19 and the economic reaction to that and the need to respond has just probably swamped all other things, and that's why I say linking it back to what those long-term goals of government are, when you may be looking to gain some extra funding or whatever. And it's definitely that well-being framework that you need to put those ideas into the context of.
What do you think the impact is of having a general election scheduled for September in terms of our government's decision making to date and what we can expect to see over the next few months?
Great question, because I have worked in politics, so I do sort of like politics. Look, these sorts of things are pretty challenging for governments, and I think on the whole, I give the Labor government pretty high marks for how they have responded, and you know. They've just done a great job, really. But while it's hard for government, it's hard for the opposition as well, because it's not really something that you can oppose that strongly. And the leader of the opposition has had a couple of goes at it, and they've sort of backfired on him a bit. Look, I think, you know, there was a poll out yesterday, I think it was, and Labor has soared in the ratings, and National has collapsed. And look, I was not at all surprised by that, because the government, as I say, government's done a great job, and you can't get out and oppose what they're doing, because what they've been doing has been fundamentally right. But then you say, well, look, a week is a long time in politics, and I think by the time we get to September, so long as we're in recovery phase, we haven't seen another wave of infections. There will be something else that will determine the outcome of the election. That'll bring those two poll lines back closer together. So, you know, I've given up making, an MMP, I've given up making predictions on elections, but you'd have to say right now, you know, Labor's looking pretty strong, National's looking pretty weak. I will just guarantee it will look different in a month.
And I guess that is one of the key things, is in terms of whether potentially we face the chance of a government, of a political party that can govern alone instead of under the MMP structure. That would be probably the biggest game changer.
Yeah, I mean, that poll certainly suggested that could be the case, but we've had lots of polls over the years that have suggested that in the middle of terms, you know, for both Labor and for National. But yeah, it would be interesting to see if that could happen.
Another question: do you see the risk of a second fall that is deeper, like the profile of the 1929 crash, driven by the reduction in government stimulus?
Look, really good question. I don't think it creates another downturn, but what it does is it suppresses the pace of the upturn. You know, what the government spends and invests is a big part of the economy, and there will have to be some form of austerity plan, you know, once we're in recovery, to get the debt back down again. But remember, debt, and this is why I say GDP is still important, right? Because remember, we talk about debt as a ratio, and what matters is not so much the dollar quantum of the debt, but what that quantum of debt is, the size of it in relation to our economy, and therefore our ability to repay it. And so, you know, so long as the government can, of the day, whoever that is, can pull back on some spending, but so long as the economy is also growing, then that helps the GDP, the debt to GDP ratio. So, you know, if the denominator is growing, you don't actually need to do much with the numerator if you go back to fourth form maths. So, you know, it's a combination of factors that will get that debt ratio back down again. But I think what you'll find is that the government will be, of course, very cautious not to push the economy back into recession on the back of its own policies, and it will only be cutting spending or raising taxes at a time in the cycle where it can actually do that without causing any damage.
Thank you, Bevan. Now, I think there's no more questions coming in. We've answered all the questions, so I guess people have got maybe this kind of last call if you want to ask Bevan a question. And Bevan, I guess reflecting back on this chat and the questions that have come in and the fact that we've got, philanthropic funders, grant makers, community groups on this webinar, is there anything else you'd like to add that you haven't had a chance to say?
Oh, look, probably not. But if I was going to emphasise anything, it would just be that the government does have a plan, and all governments have a plan, and that plan has just been derailed for a while. But it comes back to that good question about the wellbeing budget. And look, I think that I think the government is going to be very keen to be looking for partnerships as we focus on some of the things where there are joint aspirations, and you put that around climate change and housing and inequality. And I think there's plenty of opportunity for Philanthropy New Zealand and your members to have some pretty deep and meaningful conversations with the government.
That's great, thank you, Bevan. And we certainly have seen the government be very open and accessible in terms of providing information for us and also for our members to input into. And a couple of the areas are around, their kind of longer term thinking around the food rescue and distribution system, and also we're having a chat to them about, how to make the data that government collects to inform its decision making more publicly available, so it can be used by community groups and by funders to kind of gather around for kind of a cross-sector response. So they're definitely looking for kind of constructive partners to help in terms of the recovery. Well, Bevan, thank you so much on behalf of Philanthropy New Zealand, and also on behalf, we've had more than 50 people listen in today. Thank you so much for coming along, making your time available. And thank you as well for your ongoing support with Philanthropy New Zealand. And awesome. I hope everybody enjoys the rest of their day. Thank you.
Thank you, Sue.
Bye. Mā te wā.